Hi, my name is Chris Mays, and I am the host of the Family Office Podcast, where we talk to people in the family office industry with the intent of educating and promoting the community's best interests and knowledge. And today I have with me two of my colleagues, Jenna Kerwood and Kevin Scholes. And we're going to talk about property taxes. And the reason that property taxes are important right now is that in a lot of geographies, property values are down. And the last 6 months of comparables shows that. So there's an opportunity here for both individuals on their personal residences as well as owners of commercial property to go in and get a reassessment and potentially get a reduction in property taxes. So let me introduce my two guests. First, I'll start with Jenna. Jenna is a partner in Armanino's tax practice with 30 years of experience. She provides real estate, personal property tax services for clients throughout the United States. She has expertise in all property taxes, including valuation, negotiation, research, planning, compliance, and administration. Her specialty is managing large outsourced engagements for clients in the telecommunications, renewable energy, retail, and manufacturing industries. Prior to joining Armanino, Jenna was a partner at Brown Smith Wallace, where she served the property tax practice leader. Jenna also has 10 years of Big Four experience, beginning at Arthur Andersen and transitioning to Price Waterhouse Coopers. Prior to joining Andersen, Jenna was a property tax manager at Premcor, a very large oil and gas retailer refiner, and worked as an assessor in Texas. So Jenna, you actually come from the regulatory side.
Yeah. Yeah, who knew? But yes, that's where I started in the government sector. So that's where you learn everything from the ground up, let me tell you. So
all right.
yes.
Right on. And Kevin, I don't know you as well, so why don't you introduce who you are and what you do?
Okay. My name is Kevin Scholes. My title here is Senior Tax Manager for Property Tax, and I primarily focus on real estate taxes here. And that's the whole ball of wax: commercial, industrial, residential, multifamily, retail, all of the things above. And what we're going to talk about today is single-family homes, very, very large single-family homes that have a great tax burden. And we've done that through we've gotten those cases through the family office folks that come to us. And as I've said, they want to make sure the taxes are taken care of, whatever that means, either appealing, but definitely review. How do we sit? Does anything need to be done? I mean, they're happy. They seem to be happy when I tell them it's
let's
fair.
Step back for a sec.
Okay.
And can you explain the basics for how property tax are calculated and
Sure.
what factors influence these assessments?
Yeah. Primarily, most states are based upon fair market value. What you can sell it for today, the date of lien for the tax assessor. Most states do it fairly regularly. Some do it every year, some do it every couple of years, but they're going to try and calculate what your fair market value is. That's what your value should be based upon.
As of January 1.
Usually January 1. The one big exception, and there's a couple others like it, is California. California is not based upon fair market value. California is based upon what you paid for it, and then it's marked up, at any point in time. Say you bought it in 2019, and then they mark it up a few percentage points each year. So California can get really crazy as far as what you're paying your taxes based upon and what your true property value is worth.
So are you saying there's no opportunity in California to appeal then? Because it's
not at all. Now, there's definitely an opportunity to appeal. It's just a different type of system. You just have to look at it differently.
But it's still based on the current fair market value, the California.
So you've got that thing where, as I said, you bought it in 2019. It's only going up a few points. I've got an example from the commercial side, but it's the same thing. Property values generally go up. California's a great real estate market. Everything's always hunky-dory. Everything's better. But in this case, it was a retail thing that was left behind. It's, there's newer retail, fancier, all around it. All the big box people had already have their places that they wanted. Nobody wanted this thing anymore. So it's glory days. We're past it. So it needs to be recognized that, hey, this is different than the rest of California. This isn't always growing. This one actually has gone down in value. It's not worthless, but it's gone down in value over years, while everything else has kept going up. And that's the kind of thing you have to bring to the assessor's attention in California, is when you're running against the grain, things aren't going as well for you. It's a little different in residential, but probably something that would create a problem like that in residential, some large condition issue, you know, wildfires, things like that. You need to bring those to their attention. Things are damaged, not fixed up,
Yeah,
that kind of thing.
And to answer your question, you know, the key is most all property is valued based on fair market value as of January 1 of any given year. So that's really the time period they're looking at. So if you buy or sell, if you're buying or selling property during that time period, it clearly needs to be reviewed. But our recommendation is really all real estate needs to be reviewed on an annual basis, whether it be residential, I mean, your personal home, your businesses, you know, land, whatever it is you may own, all of it needs to be reviewed on an annual basis. And by a professional, someone who can help you determine the fair market value. It's not always obvious, so.
Right. So, okay, well, that's actually a good segue. So, but without having some fire or something that decreases the value of the asset, I mean, right here, right now, we have seen decreases in sales, and certainly in the, you know, the real estate markets of Austin, New York, Los Angeles. I've had a number of clients that haven't been able to, Miami, haven't been able to sell their homes for the you know, the value they paid for them in the last 3 years.
Mm-hmm. Yeah, that's very much the case. Interest rates is part of that, especially the lower you go. But why would anybody want to, you know, it'd be great to sell your property in this market, but then you got to give up your 2.5–3% loan and pay a 6% loan. So it totally changes things. And yeah, there's lots of things to affect it. And basically what I do is I bring conditions like that to the assessor's attention. You want to point those things out because the assessor wants to treat you like everybody else and do it in a big swath, and everybody's the same, and you step forward and say, no, this is different. You got to take this into account. If you literally put it on the market and you're not getting any attention, that's the kind of thing they need to hear about, because they only hear about sales. They only hear when you do sell it. They don't hear about properties unsold.
Right. I mean, assessors are responsible for mass appraisal, and that is what they do for a living. They have to appraise massive amounts of property, and they do have to be uniform and equal across the board. So the only way you can stand out is if you, like Kevin said, you have to bring it to their attention that, hey, this property isn't the same as the one that you're looking at down the street. It has these issues, you know, there's a crack in the slab or whatever, but you have to bring those issues to the assessor, because they're basically trying to keep everything equal and uniform across the board.
So, okay, so I guess you kind of answered my next question, which is what are the signs that a property owner should look for to determine if their property is overassessed? It would be they're relative to the other properties in their neighborhood. It wouldn't carry the same valuation metrics. Are there other factors that someone should consider?
Well, what I'd say that is that you can think about it. You can do your own research. You can certainly do your appeal. Anybody can appeal. We're just doing what people can do for themselves. But somebody that's looking at it all the time, like we are, we know about not only your property, we'll know about other properties. It's just another thing to leave to the experts. You should have it looked at every year. You don't need to worry about it. You just have somebody look at it, and we generally work on a contingency basis, so it really doesn't cost you anything. So again, when I go back to the family office folks and say, hey, this one's fair, but we really ought to appeal this one, they're like, great. And then they report back to their clients, accordingly, and everybody seems to be happy with it. So, okay, you should be looking at it all the time, but you don't have to worry about it. Just there's more than enough people like me that would willingly live at your property.
So walk us through what the typical process is for filing a property tax appeal.
It varies, all kinds of, there's county level, city level, and state level. You've got to find the right jurisdiction. There's usually simple forms. You go to usually a local board of real estate people, hopefully, and that's where most of it gets done. But as that's sitting out there, you can always talk to the assessor ahead of time. So I would say that talking to the assessor is informal. Filling out a form, going to the board, making a more, it's not like court, but it's a little bit more formal. That's a formal appeal. And then there's levels of appeal that come after that. So you can always talk to the assessor.
Yeah, the most important thing though, and this is what really catches a lot of taxpayers and our clients, is timing.
Right.
There are appeal deadlines for real estate and they're very difficult to get around. So you have to know when to appeal. And of course, because we're working, property taxes administered at the local level, all of these due dates are different. So it's just very important that, whomever is monitoring your real estate is making sure they're aware of those due dates. Because once you miss the due date, it makes it a lot harder to get anything done.
So as I said, you can always talk to the assessor, but the best time to talk to them is when they're doing their own work. So they put out a valuation. It's a revaluation year. Here's what we think it's worth. The best time is to go back to them and talk to them then. You can talk to them anytime, but they'd really rather not do anything, just like everybody else. But they'd rather do it when they're working on it, when it's right in front of them. And that's the best time to do it. And what Jenna's talking about is they'll put out a piece of paper, they'll put out a notice, it's online many times now, but you don't get a whole lot of time. You get 30, 45, 60 days.
Sometimes as short as 10.
Yeah, it
10
can be
days.
very, very short. So the main thing is hey, I got my assessment notice. Don't let it sit on your desk. Give us as much time as possible to determine whether we want to take it any farther.
Right.
And that deadline, that 30, 60, days is the time between when you receive a piece of mail and when we have to get a form before the board. And oftentimes, if you don't do it that year, you got to wait till the next year.
Okay, so you can't appeal it and retroactively go back to past years. You can only appeal it for the current year.
There's exceptions, but yeah, generally that's the case.
Generally, that's correct, right?
Okay, so you have this phone conversation and you just call the assessor up and get the assessor on the phone, or how?
A little bit like that. We actually would get an authorization to show that we, letter from our mother that shows that we work for these folks, and we'd like to talk to you about this. And like I said, they're already in that game. They know what's going on. They're talking to me and everybody else. And yes, we'd like to talk to them and say, hey, can we work something out? Were you aware of this? Were you aware of this? Let me get you this information. Let me send you this. And before those formal boards start, they've got all kinds of power to change it. Okay, and that's what's great. The board has power to change it, but you have to convince some people, and they're a little stingy or not all that independent. It's a decent way to change it, but I'd rather do it informally. I'd rather have as much time as possible.
The assessor, so you can have this informal conversation with them, and the assessor could proactively say, okay, we'll reduce the value of the home by whatever X%. Or there's this board process. What's that entail?
Putting on basically the same information in a more formal process.
That's if the assessor disagrees with you. Like let's say you and the assessor disagree on the reduction of value, or the assessor is unwilling to move to the value that you think the house is worth. Is that when you?
Yeah, that's right. The assessor says no, yeah, you move on to the board. The board says no, you move on to the next level. Yeah.
Okay.
So it's called informal. The first appeal is informal. They call it an informal appeal. That's when Kevin or we would go to the assessor's office, literally sit down with an appraiser sitting across from the table. We show all of our stuff, they show theirs, and we hope to come to an agreement. If not, then you go to the next level, which is generally the appraisal review board, the state tax commission is the next level. The names are different with every state, but for the most part, you start with informal and then you go formal, and then you can proceed on to the state and courts if you need to.
Okay. So the board level is the next level up, and it formalizes the process a little bit further, and but it's the same process where
Yeah.
you're having a discussion with the
Yeah.
board and,
Theoretically, they're objective members of the board. In that situation, you would say have 3 board members, an appraiser, and then the taxpayer. So the taxpayer, again, you provide all your information, the appraiser has the opportunity to share all of his information and the basis of his value, and then the board members actually are the ones to decide and determine the value.
okay. And if you don't get the outcome that you're looking for there and you go, so then you go to court or how does?
Well, in some states you go to court, some states you go to a state board. Again, a more formal board. At some point, you probably would have to get an attorney involved as well. We work with a lot of attorneys, and they handle the legal stuff. I handle the valuation side, and together we could work something. We're always hoping to work something out. Sometimes you do go to the next level just to keep talking. You don't really want to go to the whole full hearing with depositions and all that kind of stuff. It's very expensive, but it mainly the first thing it gets you is it gets you more opportunity to keep talking.
Right.
And going back to your point about, why would you go to the next level? Sometimes the assessor wants to do something, but they're not, they get beat up a lot. Oh, don't give away the store. I don't know what they're told, but I can tell they're told something, right? And they just don't have the power to do it. They'd rather have somebody else tell them to do it. So they might sort of agree with you, but they don't want to stick their neck out. So they'll speak at the board, we'll speak at the board, and then the board gives us what we want. It doesn't always work out that way, but it can work out that way. Right. So
It takes the monkey off their back.
Right.
Got it.
It's not like we're not pushing a dead horse. We're just trying to find somebody that'll say yes,
Right. Yeah, because it takes risk to say yes if you're the assessor. So
Right.
I can understand it from their point of view. When does a court get involved? Like when do you have to go that far?
It's very rare. It's way down the line in most places. Minnesota has a tax court, but it's basically a state board, like we do in most other states. Those could be administrative law, so that's why the attorneys have to be involved. But again, filing for it and going to the hearing are 2 different things. It usually can be months and months, sometimes years before you actually go to the hearing. So again, I look at it as an opportunity for me to keep talking to them. And on the very biggest cases, and I've never had any that were residential, to tell you the truth, go to a actual hearing at a state level or court level. I'm not saying they don't, but it's not going to be very likely, just because the tax dollars involved.
Yeah, I mean, it has to be significant dollars involved.
Right. That would be more for a huge,
worthwhile.
large commercial, large industrial kinds of things. It is there though.
Right. So are we talking hundreds of thousands of dollars of tax risk in order to justify?
At least tens of thousands, yeah.
At least tens of thousands. Okay.
Yeah.
Okay.
Another complicating or requirement, I mentioned you need an attorney to go farther. A lot of times you'll have to put on your own appraisal at that point. So you'd have to go out and get an independent appraisal. And I can't do that, but I'm kind of I move the whole thing through the process. But we get an appraiser, and so they'd have their value, we'd have our value, then you go through the whole process. But again, we're talking mainly about residential, even large, high value residential. It's not going to be very likely that it goes that far.
Right.
So in this process, what's the most convincing evidence that you can present to the assessor that your property is overvalued?
Well, there's lots of things. I mean, sales always help the best.
Right.
Sales of the subject is absolutely the best. Sales of similar properties, comparable properties are very good. Income, not so much. As a matter of fact, in terms of high-end residential, I don't even want to get into the
Income approach doesn't make sense.
the Airbnb and all that kind of stuff. We don't want to go anywhere near that. But that actually technically could be considered income. So really, for residential, we're talking about cost and sales, and those are the 2 approaches. The 3 approaches. The third one being income approach. So it's those are important things.
But yeah, definitely the sales approach is the best, absolute best evidence.
But
So
there's a
comparable,
lot you can do,
similar
Nikki.
properties.
Right. But as I said, a big thing is to make sure that they have they have the number of bathrooms right. Do they have the number of bedrooms right? Do they have the square footage correct? Are they calling something that's like a shed finished area. No, it's not, it's a shed, you know. You gotta make sure all those things are right. And when the properties are exclusive and way off the road, you know, the job is still done by driving by, you know. And now maybe when you build it, they actually walk the property and see it because they're there with, you know, permit inspectors and all that kind of stuff. But after that, they never get on the property again. So they're all doing it, you know, they're doing it for the driveway. And, you know, do you have a 1,000 square foot deck or a 4,000 square foot deck? You know, they don't know. And that's the kind of stuff first you need to make sure that, let's call it, the property description is correct. And then condition. Some things are, you know, say you had an addition put on, but you never finished it. Well, the addition went on and it was, you know, added 1,500 square feet. Okay, well, that would be my job to point things out. Let me give you an example. This is a property from a family office client. It was a nice old mansion. They tore down to build a nice big mansion, brand new. And I was involved in making sure the timing was right because they had purchased it, they had cleared it out, and the question was, one of whatever that year was, what was there? Well, they hadn't quite started construction yet, so I you know, and they hadn't torn the building down yet, so I had to make sure that they, you know, didn't overvalue it. So I brought the sales price to them, told them that it's going to be a tear down, and yes, it hadn't been torn down, but it was basically wrecked, okay? And it was not a functioning mansion anymore when I looked at it, and this was right around the first of the year. And so that was a value right there, just making sure they could see it and understand it. And then by the next year, they had the new building up, and you know, haven't done it since. But that's the kind of thing that the assessors need to do the work, and I bring a little bit more information to them.
How do you find out what the assessors used to value your property? In other words, the description, the number of bathrooms, and
oh, that's all in their records. And more and more, you know, everything's online.
Yeah.
And if not online, you can get it. And it's very important.
It's called a property record card, and you can call and you can request that, or a lot of jurisdictions have it online now.
Right.
So what about aircraft and yachts that also have property tax, I mean, assessments? Are those open for appeals as well?
Sure. Yeah,
Yep.
any property is. Yeah,
And it's
definitely.
roughly the same procedure?
Yeah, right. Yeah, with aircraft, in most states you have to report, you know, all the specifications of that particular aircraft, and often the mileage, and there's often opportunities to allocate the mileage too. So depending on where that particular aircraft has been hangared in that state, and you've only, you know, flown a certain number of miles in that state is what you're taxed on. So we often have to request the pilot logs as well. But yeah, you get an assessment the same way. Once you receive that assessment, if you recognize that it's not correct, then you have the opportunity to appeal. You appeal at the informal level first, then you would proceed on if you didn't get the right answer. So.
Okay, so along that same lines, like how does the appeal process differ for commercial properties and residential properties, if at all?
There's not much. There's not much to speak of. There are a few jurisdictions that have like a little bit different route. It's sort of like, think of it in terms of like small claims and regular court kind of thing. But for all intents and purposes, it's not a big difference. So I don't think that.
Maybe information. I mean, you have to provide probably a little bit more information with the commercial.
Yeah.
Real estate.
Well, that is one thing to
income,
point out.
occupancy, those kinds of things.
You know, in order to get something, you need to give something. So you need to give up your property. I'm sorry, give up your information. Tell people about what your property is. Sometimes people don't like to talk about, hey, this is really not very good. I don't like it. But now's the time to say it. Tell the assessor about it. You don't have to tell your friends about it. Tell the assessor about it. And giving them certain documents and things like that. And another thing is allowing the assessor to come through. As I said before, they usually are from the street, right? They're driving by. It's amazing how much that means when I can say, hey, you guys want to come look at it? You know, and I take them around the property. That shows you're willing to, you know, to do what you need to do. There's a lot of people that want to, oh, I want to get my property reduced, my value reduced, but no, I don't want you to see my, you know, the deck that I put on myself, or, You know, they got that they get that all the time. So when you're offering to say, hey, let's go look at it, that can be very persuasive.
Yep, that's a really good point.
You were saying something about the changes in income for commercial properties don't really impact the valuation for appeals, because like a lot of commercial properties are valued on cap rates, and if your cost of debt has gone up, and well, I guess that wouldn't directly impact the cap rate, but it could impact your income and any discounted cash flow type of valuation that you would do on the property. How do you factor the vacancy or the income coming off a property in a commercial setting? Does that go into the property tax appeal?
Oh yeah, yeah. On a commercial side, it's very, very much important. Actual, rates, not market rates. What are you actually getting? They love to see that. What are your actual expenses? Cap rates, obviously, very important for the whole thing. All those things need to be taken into account when it's any sort of commercial income producing property, office.
Occupancy levels, which is a point.
They're gonna, when they're valuing, when the assessor's doing their job, they're gonna say, hey, the market is 7% vacant. Well, if you're 30% vacant, the building we sit in right here in St. Louis, we had, this building had, we had a lot more vacancy than it appeared, because there were so many subleases. We even started on a sublease. We just started showing up on the rent roll a few years ago. We've been here for years. And that original lease was signed way back when. It was really high. What we were paying was way down here. And so I had to bring that to their attention. Like, hey, today this wouldn't get, I don't know what the numbers were. Wouldn't get $30 a foot. It's only going to get $25 a foot. And that's huge. So actual rents, actual vacancies, actual expenses, again, they guess at all that stuff until you show up. So if you're willing to give them that, then lots of things can be done.
And it's particularly important right now, and we keep waiting to kind of see what's going to happen with all the work from home. The movement of all of these office buildings are now becoming vacant, or people are subleasing, and then once all these subleases run out, then what's going to happen?
Right.
What's going to be, standard?
Demand has gotten very soft.
Right.
Almost nobody needs more space than they did before. Everybody's got some excess space. We've got whole clients that have businesses here in town. They're just not coming back. They had catering, they had coffee stands and stuff like that, because there were people milling about pre-COVID. And now with work from home, it's much sparser, it's much more wide open. I mean, at some point, people are going to say, well, we're not going to pay for that anymore. We did have a client that had a big campus, and they had one building that was up for lease, and it came due, and they just said, okay, thanks. And it worked out great for them. Not so good for the property owner, but our client was the tenant.
Right.
So, okay, so if you're on a triple net lease as a tenant, then can you appeal the property taxes for?
Yeah, usually you have the permission in the lease. You should check your lease, but usually you have the permission to do it. Triple net means we're going to let you handle everything, and that includes property taxes. So yes, we can work for anybody, whether it's leased or not. If you're on a lease and you control the situation, we can work for you. So especially if you control the whole building, you're one little shop in a retail mall. Now we can't work for one at the detriment of the others. We're not going to do that. We have to work for the owner in that case. But on a single tenant situation, off a triple net, yes, we can work for you.
Well, okay, so what kinds of things can property owners do strategically to to maximize their potential in an appeal?
I think just have somebody look at it annually. Never let the assessment, the tax bill go by without somebody taking a look at it, and you'll pick up on things like that. You'll find issues that pop up from time to time. But just have somebody look at it. Don't just pay it.
Okay. So beyond not looking at it, are there any common mistakes or pitfalls with getting an appeal?
Well, you asked before, like, how do they know what their property's worth? It almost doesn't matter sometimes, I would say, what they think it's worth. It's what the market's doing, what the assessor's thinking. If the it's just good to look at it.
Yeah, the other point is not all jurisdictions are required to send a notice. So that means you don't receive a notice, so the next thing you receive is a tax bill. Once you receive your tax bill, it's too late to appeal. So the first time people become aware, and that happens in Missouri a lot, but the first time people become aware of their value is once they get that tax bill and they're like, holy, what happened? And now they call us and we're like, well, you missed,
We'll do it next year.
you missed the appeal date. So that's Kevin's point
Okay.
too, is that's why even though it's not necessarily top of mind or convenient, it's very prudent to make sure somebody is looking at your values on an annual basis, just so you don't get caught with a big tax bill and then have no recourse.
Right. Even if you don't, with my point before, I didn't fully make it. If you think it's fair, let us take a look at it anyway. We may be able to do something. And it doesn't cost you anything on a contingency basis. So if we can do something, great. If we can't, you're better off.
Well, okay, so what's the net impact of this? I mean, what kind of savings have you seen clients achieve in a successful property tax appeal?
All over the board. Small, I mean, usually people won't make a change if it's not at least 5%, something like that. But, 10, 15, 20. And we're in a very good market right now. When things start going bad, and I don't want that to ever happen, but it will sooner or later. I mean, I've been through several recessions, and that's when really people pay a lot more attention to what I do when property's falling. Because then I always say the assessors are glad to take it up, and man, they've been taking them up big time the last few years, bigger than I've ever seen it in 1 year jumps. But they never take them down, never take them down as fast as they take them up. So they'll take it up 10%, and things went bad. They take it down 5% when they really should be taking it down maybe 15%. And that's, I mean, I've been through that, like I said, been through the recessions, and that's where you really need somebody to push to make sure you get what you need.
But we have to be in an office recession right now, right? I mean, for all the reasons that you listed prior. So those values have to be coming down because there's just lots more vacancy and you're lots of sublets right now for smaller amounts of space. I mean, we're just seeing that all over the marketplace. So I'm assuming pretty much anybody who owns office should be filing a appeal. I mean, is there any?
You're exactly right. They should be looking at it, and if you can file, there's different rules though. There's a time lag where, like Missouri, we have a 2-year cycle, so you really can't talk about it until 25. So by 25, the assessor better be bringing things down quite a bit for office. The other thing is, as you mentioned, an office recession. Not everything else is a recession, but office certainly is, and that's weird. That's never happened before. Usually everything goes down, everything goes up together, pretty much together. But that's an odd thing. We may be only talking about big cuts in offices in 25 if things don't really change, because it's definitely happening there. But retail seems to be holding on. One issue for retail is my kids buy everything online. I still get in the car and drive to the store. That those days are passing, and so retail's
definitely taking a hit.
Right.
We also, as you mentioned earlier, do business personal property returns for a lot of our clients, and we have a lot of retail clients, and they are slowly but surely closing their physical retail stores and going online only.
So for retail property owners, they're going to have their day too.
Yep.
It's nowhere near as severe as the office thing with work from home, but it's
that's kind of been a theme though now for almost a decade since Amazon.
Yeah.
Amazon's over a decade old,
but they're still building retail centers, so I guess everybody hasn't caught on.
It's got to be something. I mean, there's certain retail, of course, that is doing well. I mean, I look at here in Los Angeles, and we like the Grove and a number of the other good retail sites are doing very well, or at least seemingly doing very, very well. And yet then you hear about shopping malls in other jurisdictions which are almost all vacant and not worth what they were 10, 15, 20 years ago.
Right. Going back to California, when I was talking about shopping malls, people in California should be appealing shopping malls because they're going the opposite direction of everything else.
So are there, if you file an appeal, like in the current year, does that value carry over to the next year, or do you have to appeal it again the following year?
Varies from state to state, but no, that'd be the worst possible situation to have to do it every year. But there are places that do it, like Florida pretty much values everything every year. But that doesn't mean they can ignore what you just did. Hopefully they didn't do that. You had something that was worth $5 million. You told them, you convinced them it was worth $4 million. Hopefully they don't throw that out the door, go back to $5 million and then take it out. Hopefully they take it to $4 million and then they were going to take everything up a couple percentage points from there. That's what you'd hope for. And we do it on a contingency basis on a 2-year fee, 2-year savings. And if it holds for the second year or some portion of it, then we bill a percentage of savings for the second year. And hopefully that's the case. It could be for several years. No guarantees.
And there is a philosophy too for certain business owners, certain companies, certain consultants will file an appeal every year. And it's to do exactly what we're talking about, is you want to go and you sit down with the assessor, you talk about that property every year. And so you understand, they understand, number one, you're coming in and they're going to be having to support their, sales and their value as well. And then it's also an opportunity for you to come in and say, all of this has gone right, this has gone wrong. So, this is the status of our property this year. So there is a philosophy to appeal every year. I mean,
Or frequently even.
Yeah.
And the assessors don't tire of that and just.
Well, I can't say that they don't tire of it, but it doesn't matter. It's their job.
Yeah.
So let me ask this question. How important is it for property owners to work with a professional property tax expert versus doing this on their own?
The taxpayer themselves can be very persuasive, but why would you? What else do you do on your own? You have somebody else work on the HVAC and things. It's just another thing to leave to somebody else. And again, because we do it on a contingency basis.
And we have
It's
a lot more data. We have a lot more tools. We have property tax software, and we're capturing all of the information on any property we touch.
Yeah.
All day, every day. So when we want to look at a particular jurisdiction or know a tax rate, we can go to our software. Chances are, normal individuals not going to have access to that. We also, have CoStar to help us with sales. So we have resources and tools and, relationships as well. Relationships with the assessors. They know us and they, consider us to be credible. And so that's helpful too, but that would be mainly.
So the property owner knows their property very, very well. There's no way I can even match that. Hopefully I learn as much as I can and I'm catching up to them, but I'll never match it. But what I would know that they wouldn't know is about other properties. I may know something about their competing property. I may know something about what's next door or across town. They don't have any of that. And that gets into the sales and whatnot, sales leases, cap rates, things like that. That's where they would be hard pressed. They can go in and kind of, say, this is what I got and whine a little bit, but they may get what they need, but I think I could do better.
So what should a property owner look for when they're selecting a professional to assist them with their property taxes?
Just someone who knows what they're doing. Let me point this out to you. This is, the locality is important. Knowing the specific market is real important. I don't know everything. I'm not saying I do, but what we do is we'll take it as far as we can. If it's something where we need local help, we reach out to an affiliate and work with them. And it's just more of a case-by-case basis. If it's something that we can do and we've got information, we can get information easily, great. If not, but my point is, please have somebody do it. So have somebody looking at it every year.
Okay, so you mentioned CoStar. Are there other technologies that are coming into the property tax market? How about AI? Are there AI solutions now that are focused on the property tax market?
I'm sure there are. There's so much changing for everything. I don't have any more information on that. There are similar services to CoStar That's CoStar, just one we
You
actually.
use CoStar like as a desktop valuation in order to get.
Basically, more.
It's a sales database.
Yeah.
They basically capture sales and.
And we'll describe properties, you know.
Yeah.
This is one thing that helps us reach out, you know, nationwide and stuff is I don't have to be in Portland. I can find information about Portland sales, you know, through CoStar and property descriptions. It needs to be checked, but you can find out quite a bit of information through something like CoStar.
Okay. Okay. So for wealthy property owners looking to optimize their real estate portfolios, what final advice would you offer regarding property tax management?
Well, I think number one, we've said it a lot today, but
Look at it every year.
you got
Look
it.
at it every year.
But then, and I mentioned it, but we capture all of the information, if we're reviewing or appealing a property, we're capturing all that data in our software. So it's very valuable through the years, but it also allows us at a glance to go in and say, hey, wait a minute, this is going up, you know, rapidly. You know, we really need to keep an eye on it when you can see multiple years at a time. So it's really just capturing, having a database, having data to where, you know, you can go in and look at it and see the trends, and, you know, which is very helpful, you know, very helpful too. So, you know, just being able to, I guess, collect the data and use and be able to, you know, make assumptions or.
Well, and we also put in if I work in 2024, I put the information in the system and it's there when we look at it 3 years down the road.
Right.
You know, there's a great value to that. Just having it all set up. Hey, this is in this jurisdiction. They're going to publish their values next week. We ought to contact the client to get the notice. A lot of times we don't have to get it. You know, you used to get a piece of paper in the mail and you had to send that to somebody. Now we can get it online if you know when it's coming.
Yeah, the other thing is making sure whomever's looking at your property is aware of any changes. So if you had, you know, say a kitchen fire, or if you added on, you know, square footage, or, you know, you've done some significant changes, that's when you really need to pay attention and see what the assessor's doing. They can get the information from the county when you file permits. So if you're building on, or you're building a pool, or you're doing all of these different things, then, you know, they do have access to that information. So that's when it's really important too, to make sure somebody is keeping tabs on your assessment anytime things change. Because again, the assessor doesn't know necessarily if something bad is going on. Chances are, if you're building out or you're remodeling, they'll know that from your permits.
Right. So anytime there's a fire in a building, is there a bunch of property tax assessment appeals professionals?
Well, and what have you done? We had a house fire, and the question is it fixed by 1/1? We talked about the valuation.
Oh, right, by the valuation. Okay?
So it might be charred on December 31st. Will you treat it a certain way, like it's not there, basically? Or as our crew come through and made everything even better than it was before? Well, that's a different story. So you've got to look at the timing. Yeah, so a fire, flood, any of those things. We had floods here
Right.
recently.
Flood is a good example.
Some people, that's more on the lower end, but you know, people said, well, we tore it all out. We don't have any money to fix it, so we're just going to leave it that way. Well, if you went from a finished basement to an unfinished basement, that's something huge. That's something the assessor would definitely check when you finish it. So you definitely got to make sure they uncheck it when it's gone.
Yeah. So, you know, so any changes.
Those are flash floods locally.
Right. Any significant change, either way, you know, should be noted. And a little red flag go off. You know, I'm going to make sure that I think about this when we get our assessment.
We had a house that I've got under appeal right now. It's very nice neighborhood. It's a much better house than the surrounding neighborhood. That's one thing I've got to keep pushing on, is that it's a, you know, $3-4 million house, and it's surrounded by $700,000 houses, which are very nice, but you know, they're not $4 million. And so I've got to point that out, that they're really, you know, to go for a comp, we've got to go 4 or 5 miles away. But the reason they're so, it's such an odd area because it has a really good view. They built it on a bluff looking out. And but the other thing is they're redoing their kitchen. and you have a very high-end home, everybody expects, modern and very high-end amenities, things like that. And so, what if it's, really dated? Oh my God, it should really be adjusted, because, a very high-end home is not you need a high-end kitchen, put it that way. All new appliances, things like that. One other thing about talking about high-end homes that we've had some issues with is, the Sub-Zero and all of those appliances. Those are those can add up a lot. And that's technically personal property. So you want to look at that and make sure that
you would have to, so if somebody's got a couple $100,000 worth of kitchen appliances, they technically even would owe personal property taxes on those above and beyond their home property tax?
I don't think so. I think it would be because it'd be considered affixed to the real estate, so they'd be considered under the real estate. But you want to kind of watch it. We had an issue in Texas where we were looking at that, like, hey, is this sale price for the real estate or for the personal property? Because there was a lot of, if you buy a finished home, I'm sorry, type home. Somebody said, I bought a $4 million home. Well, it was fully finished. We need to make sure that gets taken out. So it's not a $4 million sale price. Now it's 3.5, whatever.
So in other words, they leave everything. So they're gonna leave all the furniture, the fixtures, the appliances, everything is fully furnished. And that is included in the sale price. So you've got to make sure you knock that out if you're going to use the sales price.
Oh, sometimes when you sell a home in Florida, right, you sell the boat too, right?
Yeah.
And you got to make sure that gets taken out. Make sure only the real estate price, is associated with the real estate value.
Right. Okay. All right. Well, hey guys, I really appreciate your time. This was super helpful and illuminated a portion of the market that I've only touched a couple of times, but it's important to people, and I think it's excellent advice that you've got to look at this every single year, especially if you're working for a family office, because they could have houses that are $50 to $100 million, and even 5 to 10%, or this year we've seen houses sell for 60, 70 cents on the dollar in those ranges here in Los Angeles, also in New York. There's a significant amount of property taxes at stake in those kinds of values. So thank you very much for your time, and really appreciated this conversation.
All right. Well, thank you so much, Chris.